And kindly, you will be able to tell us in the chat box which area you're presenting. Your presence underscores the collective importance of this sector, which contributes to 50% of Kenya's GDP, as will be confirmed by our gentleman from KIPRA, and employs quite a number of people nationwide. So the purpose and relevance for this particular discussion couldn't be timelier. With the African Continental Free Trade Area unlocking new markets, Kenya services from fintech to education, I believe, are poised to scale regionally. Yet we have challenges that come with this, which we are going to discuss. And also, the webinar is going to equip us with actionable insights, which we can be able to use for gaining advantages over such agreements in terms of services, and also the policy tools which you can be able to use to enhance competitiveness. The language you're going to use for this webinar will be English. I'm sorry if you wanted Swahili or French. We are restricted to English for this particular time. And for housekeeping, I think we can be able to, if there are any questions that may come in the course of the discussions, kindly let us use the chat box where we can be able to ask any questions as the presentation is going on. We have a specific session where we are going to respond to each and every question that you have posted in that chat box. And for even purposes of knowing one another, because I see we are quite a number, we may not be able to introduce each one of you. Kindly just tell us in the chat box who you are, where you're from, what you represent, and the particular sector you also representing as far as this is concerned. So once again, welcome, and thank you for making time to be with us, even as we discuss key matters relating to trade in services. Without much further ado, I now want to welcome the CEO of the Kenya Export and Promotion Services, who is going to give us the opening remarks and kick us off as we begin this particular webinar. Welcome.
Morning, and distinguished guests and speakers, colleagues. I'm sitting in for the CEO of the Kenya Export Promotion and Planning Agency to deliver opening remarks. So straight on, good morning, everyone, and it's a great honor for her to join you today to share insights and reflections on the performance, the potential of this sector, and the challenges, this being a very important subsector of our economy. Globally, the sector continues to shape the future of economies. In 2023, for instance, the services accounted for a staggering 65% of the global GDP and employed more than half of the global workforce. And this was attributed to technological advancements, globalization, and the rising demand for digital knowledge-based services. These, the COVID-19, much as it was a pandemic, it also enabled a number of institutions to go online to deliver services, to order for raw materials. And so this led to a surge in e-commerce, remote working from home, online education, and so forth. And so by 2024, the global services sector was expected to grow at 3.5, with the emerging markets playing a pivotal role. This is according to the OECD 2023. She goes further to identify some of the commonly traded services, which includes business services, communication services, construction and engineering, distribution, education, environmental, health, tourism, recreational, and transport services, respectively. In 2023, the services sector services trade hit a total of $7.9 trillion US, with digitally deliverable services outpacing the traditional ones. The fastest annual rise in services imports is noted in Asia and Europe, where both regions surpassed 10% in 2023. Europe, as at now, dominates the global trade in services, accounting for the highest total value, with a significant portion coming in from the financial, insurance, business, and intellectual property services, respectively. Asia and Oceania were the second largest contributors to trade in services in 2023. Africa, on the other hand, is a promising continent, rising, contributing to 55% of the continent's GDP in 2023. The key drivers being urbanization, youthful population, and an increasing penetration in internet. The sector is dominated by trade, tourism, telecommunications, and financial services. The Africa's tourism industry is a significant contributor to the services sector, with countries like Egypt, South Africa, Morocco leading the way. The rapid urbanization of mobile internet services has transformed Kenya's digital landscape, with the mobile penetration in Africa now reaching 50%, with over 650 of the 1.4 billion citizens using mobile telecommunications. Despite the notable progress made in the fintech and tourism and telecommunications subsectors, Africa still continues to contribute the smallest share of global services, trading services. Distinguished guests, participants, Kenya, at national level, Kenya stands out to be one of Africa's leading service-based economy, with the country maintaining a positive trade balance for the last 5 years. The services sector has consistently been the largest contributor to the GDP, making close to 55.42% in 2023. And some of the leading sectors, service sectors, include tourism, financial services, and you are all aware of the M-Pesa, what the M-Pesa has done, not only in Kenya, but even in the region. The information communication technology, business process outsourcing, education, banking and insurance, telecommunications, among a few. Now, the services subsector so far has not operated smoothly without facing a number of challenges. And our CEO went ahead to identify some of the challenges that the business sector has faced. One is the lack of regional education, harmonized regional education curriculum and certification standards for professionals. If you move, for instance, from here to Uganda, Tanzania to practice law, you will be required to submit the paper so that they can be looked at and be compared, and whether it's for them to be certified that you have the requisite certifications to enable you to practice in those countries. And so that lack of harmonization of the curriculums from universities may hinder delivery of some of the services that you may intend to offer, not only within EAC, but the African continent. The other challenge is inadequate mutual recognition of agreements. Many times countries do enter into agreements to foster trade, both trade in goods and services. And there are times some of these agreements are not mutually agreed upon. Whereas they've been agreed upon, at times the implementation is not that smooth. Low levels of awareness of the mutual recognition agreements and the process and their processes, and especially with the implementation, is also one of the challenges. It's one thing to pen down one of the some of the mutual recognition agreements, and it's another to implement to the letter so that it benefits the people of the two nations. There is also one other challenge of burdensome requirements on academic and professional qualification and licensing in foreign markets. Whereas you are qualified currently here, you have the requisite licenses that need to be certified, need to be looked at from the insurance, the professional sector in the country where you want to practice. And that may take time because to them, it may look that you are going to give them a competition. And so many times, some of them take quite a while to approve. The CEO went further to say that key sectors of our economy face sector-specific challenges, because what I've just highlighted up there is related to business sector challenges. The tourism, the insurance, and all other sectors have sector-specific challenges that need to be, that some of which will be covered by our presenters. She goes ahead to encourage that participants in this forum are encouraged to share some of those unique challenges that are specific to your sectors, so that we could, as an agency, we can take them up for appropriate attention and also redress, because we act as an interface between the private sector and the government. And so those that we are not able to address within the institution, we will forward them to appropriate institutions of government for their attention and redress. In conclusion, ladies and gentlemen, Kenya's service sector is not only part of our economy, it's the mainstay of Kenya. And as we reflect on the immense potential that the sector holds, there is need to address some of the challenges that will be highlighted not only by the presenters, but also by the participants, so that we enhance the contribution of this sector to our GDP. She goes ahead to say that despite the challenges that the services sector is facing, this is the sector with great potential, which once exploited will not only earn this country more foreign exchange, create and employ more Kenyans into some of the emerging subsectors like the creative economy, thus enabling us to maintain our service lead, not only in the region, but also give us an opportunity to enhance our global, our services brand in the global arena. I once again welcome you to today's sessions and urge you to engage the speakers, learn more, and I look forward to having a fruitful engagement as we continue to champion Kenya's journey to becoming a leading exporter of services. That marks the end of the CEO's opening remarks, but I also want to add that as a service institution, we offer a number of services, some of which will be presented by my colleague. And so I want to end here and declare the webinar open and encourage the presenters present to support by sharing all that they know, and also highlighting some of the challenges that we may need to address as an institution and as government. The listening audience, we also encouraged to contribute to the chat process, tell us who you are, the sector that you are in, and if there are issues that we may not have covered during our session, please share them so that we can take them beyond this platform. I thank you.
Thank you, Mr. Peterson Nyachoya. Peterson is the Director, Research and Innovation at the Kenya Export Promotion and Branding Agency, was representing the CEO of KEPROBA, who was not able to make it for this particular webinar. I'll kindly ask our secretariat to put up the program so that we can know how we are going to be progressing. Kindly let's have the the program on the screen? Great, thank you very much. So this is how the flow of the presentations is going to look like. Situation analysis, contribution of the services sector, diaspora, remittance, and what their role is, and how are we capturing this trade in services in as far as data is concerned. Then we'll have a Q&A session, and then finally we have a way forward. So this is how we are going to move in terms of how we are going to present this particular webinar. So our next presenter is Mr. Kelvin Nkai. Kelvin Nkai works in the Research and Innovation Department, an expert in international law, copyright law in as far as international law is concerned, and also a policy expert on issues on international trade. He will now be making a presentation on the situation analysis of the services sector. Mr. Kelvin Nkai, karibu sana.
Thank you for the very good introduction, most appreciated. I will quickly take us through the situation analysis of the services sector. Okay, so as has been introduced, my name is Kelvin Nkai. I work with the Research and Innovation Directorate as a researcher. And today I'm just going to take you very briefly to situation analysis for you to look at and to understand what the services sector entails as a whole. And this is how I intend to my presentation. Just give me a second, sorry. So my presentation is in 6 parts. One is just looking at the overview of the services sector. And then we have what we call the services modes of supply, which will actually also be presented in depth by our colleagues from CIPSA. And then situation analysis of the services sector as a whole, that is globally, the structure of the services sector, and then also Kenya's, we'll come down to the panel approach and look at Kenya's structure within the services sector, and then finally close with the challenges, that some of the challenges that may be faced or some sectors are facing. So first, we'll start with the services mode of supply, and this will be covered in detail by my colleagues from CIPRA. But generally, within the scope of services, we have what we call the modes of supply. Now, these are categorized under mainly 4. And we have what we call the cross-border trade. So you have services from one territory to another member, where you may provide legal services, either through phone, or be able to even be attended to by a doctor online. So that is the first type of what we call the cross-border trade. Then we have what we call the consumption abroad, where now you actually go physically, maybe to consume certain service. Like, for example, you move from Kenya to Tanzania on a tourism base. As a tourist, you go and actually consume the services within that country. And then finally, we also have what we call commercial presence, where you actually go and provide, let's say you set up a base. As a company, you go to a certain country, a different country, and you set up a commercial presence within that country. And then finally, you do have presence of natural persons where you go and offer a service within a different country. So this will be looked at in depth by our colleagues from CIPRA as they look and analyze and tell us what is the service sector within the country and the economic benefits that they do have to us as a country. Now, just looking at the sector as a whole, globally, that is, especially. As of 2023, you look at the services sector accounts for approximately about 65% of global GDP. and actually employs over 50% of the global workforce. That is as of 2023. And when you look at now regionally, in terms of now at a global landscape, you find that countries such as Latin America, the Caribbean, have actually recorded the highest annual growth of service exports for the last 2 years. And when you do an average, it comes to around 12%. When you look at as of by 2024, the global services was actually projected to grow at 3.5%. And so probably I believe that some of the data is actually out and it's actually complementing this as we speak. So we are yet to get the final data on the same, but as of the few projections that are there, they are almost agreeing. So when you have the Africa Economic Outlook report, it actually to some extent actually agrees to this projection. When you look at also the contribution of the services sector to the economy by percentage, and you will notice very quickly that when you compare developed economies and developing economies, you will notice that developed economies, the services sector is contributing more to developed economies. When you look at 2023, you see in developed economies, services was actually contributing 30%. And in developing economies, there is contributing around 19%. When you look at in terms of employment, actually, when you look at developed economies, it's actually starting at 74%. And in developing economies, it's actually at 45%. And when you look at just generally services also, you notice that the services sector has also demonstrated growth. When you look at the available information, data that is out there between 2010 and 2023, you see that when you compare trading goods and trading services has actually grown by a +8. But as of by 2023, when you compare with also goods, there is actually a slight drop when it comes to trading goods.
Kelvin, if you can focus, we're not getting you properly. Even on the chat, people are indicating that they are not getting you. Just focus on the mic.
Okay, I hope now you can hear me. I've had to change speakers, you might say. You can hear me? I believe you can hear me now.
It's better now. Thank you.
Okay, sorry for that. I think it's the challenge with now somewhere I am. So when you look at the structure, so let me go back probably very quickly to where I was. So as I stated earlier, when you looked at developing economies against developed economies, when you look at the structure and the contribution of the services sector, you'll notice that within developed economies, the contribution of services is much more higher at 30% as of 2023, as compared to developing economies at 19%. And when you look at in terms of employment, we have the contribution is at 74%, vis-a-vis compared to developing economies is at 45%. And when you compare the growth, when you compare the growth in services as compared to the trade in goods, you'll actually notice that there is a higher growth in trade in services for the last few years as compared to the trade in goods. So when you look at trade in services between 2010 and 2023, it's at a +8, whereas in trade in goods, it's at -5. And when you looking at it as a globally, the transport and actually the travel services actually are the ones which have contributed to our highest percentage. When you look at now what I presented earlier, the biggest contributors to the services sector, that is as of 2023, was transport and travel. You also have telecommunications there and other business services that also contributed also. But the biggest contributors that we have was transport and travel. Now, what about, because we've looked at it from a global landscape, how about Africa's contribution to the services sector? Now, Africa's services sector has been growing steadily, contributing approximately around 55% of the continent's GDP. That was as of 2023. And when you look at Africa as a whole, you'll notice that trade, tourism, telecommunication, and financial services actually contributed largely to this growth. Now, when we come to Kenya's structure of the services sector, you'll notice that as you look at Africa as a whole, Kenya is one of the leading economies in the services sector, as has been highlighted by our CEO earlier, and actually contributes to about 55% GDP. And when you compare trade in goods, when you're looking at agriculture, for example, and industry and services, you'll notice that the services sector has actually grown marginally to a large extent. And when you look at as by 2023, if you look at services sector, that 55.42, agriculture is there at 21.81, and we have the industry is at 16.8. So when you look at the services sector contribution to the country, it is huge. It is actually around 55%. And when you look at service exports, obviously from this diagram, one of the things that we can deduce is that we have actually maintained what we call a positive trade balance when it comes to our service exports vis-a-vis our imports. And when you look at us by 2023, we have service exports at around 1,883 million as of 2005 grown to 543 million in 2023. So this is actually a very huge growth. Thereby, we are actually having a positive trade balance when it comes to the services sector. Again, when you look at the sector or the sector as a whole within the country, as had been highlighted earlier, there are quite a number of services that contribute, but one of the biggest contributors that we have is the financial and banking sector, where the share of service exports stood at actually 14.16. We have the tourism industry that is a major player that contributes to around 10% of our GDP. We have ICT that also contributes, that is a major contributor, of about 2%. We have sectors such as transport, where it is projected that the sector will grow up to 19.84 billion as of by 2029. We have other sectors such as business process outsourcing. So maybe what is BPO? This actually refers to the transfer of an entire business processes of individuals from a company to a third party that is often IT based. And the projections are that as of by 2025, this sector will actually grow to about 272.13 million dollars. Other sectors such as the education sector, where it's projected to grow by around 6.84, is also a very huge contributor to Kenya's economy. So those are just some of the sectors. That is not to say that other sectors are not playing a role. There are so many other sectors that are playing a key role when it comes to the services sector. And with this, one of the things that comes out is that each sector has its own specific challenges. The challenges that have been highlighted here are actually picked up from what we call the Integrated National Export Development and Promotion Strategy, which was a strategy that had been developed to actually propel growth of the export sector. But just in a nutshell, maybe I might not be able to touch on each and every one of them. But some of the challenges, like for one, when you look at the export of the business services, well, there are issues that we call MRAs, where we have inadequate recognition of MRAs. When we talk about slow implementation, let's say we have mutual recognition with another different country, but now implementation of that MRA is actually slow. So you'll find that sometimes we want to access a certain market, and we even to that extent, we might have an MRA, but now the implementation of the same is what is a challenge. We also have burdensome requirements on academic and professional qualifications, which is actually linked also to MRAs, and the lack of liberalization of target markets for professional services. We also have the education sector, where you have some weak enforcement of quality assurance and in tertiary technical training institutions. Maybe we do not have a very clear regulatory policy for the promotion of export of education services. However, the MRAs actually comes into play when you look at this. We have also lack of a policy on distance and open learning despite its recognition. When you look at the financial services, which Kenya has actually done very well, especially within the East Africa community, where we have some banks that are actually set up within the EAC. We have also the challenges of skills gap in destination markets. Some have challenges of prudential regulations that are prejudicing the relative ability of Kenyan financial services providers to achieve commercial presence offshore. As you remember, we have talked about the different modes of supply, and maybe this one now is a challenge under mode 3. We have the tourism sector, high operational costs, which we can see there's been a lot of initiative towards reducing this. And then we have also stiff competition from our neighbors. It's like you can see Tanzania here. We have a lot of challenges in terms of now stiff competition from them. However, we always say that we are one market under the EAC. So that's an issue. The health services, where we have the lack of a health export policy that is geared towards promotion of exports of health services. And then also the issues of lack of harmonized academic and professional qualifications. You'll find that some of our health professionals are among the most, you might say, qualified. But now when we get to now take our services out there, you're actually required to go through again some other extended education so that you can be able to practice within a given target country for that matter. And we have the ICT sector, which is very key, where we have inadequate information on ICT services for export opportunities based on destination country needs. We have restrictive legal and regulatory frameworks in the target markets. We have low investment in research and development. And also we have a key sector that Kenya actually has some, I would say, strength out there. And that is the recreational, cultural, and sports services. But when you look at some of the challenges we face, some of them relate to high cost of production and inadequate access to finance to be able to maybe purchase equipment that you need for recording. Some of them are very expensive. We have issues of piracy, because right now we are living in a digital age. The moment you put something out there, it's actually pirated immediately and actually is dispersed to other people and other stakeholders. And then doping, of course, has become an issue within the sports industry. And you can see that even around the world, issues of doping are not only affecting us as a country, but all the other stakeholders out there, all the other countries that are within the sports services. So it's actually a key challenge that the sports industry is actually facing. And as I do my closing, I think we've seen that there are quite a number of issues and challenges that are faced in different sectors. So I think with that, we will actually, as we continue, you'll find that as we KIPRA will actually present on the economic opportunities that we can take advantage of as a country. We want to say that the services sector is key for us as a country, and it's up to each and every one of us to take advantage, especially of the availability of internet and social media platforms. With that, I come to the end of my presentation. I want to say thank you for listening.
Thank you very much, Mr. Kelvin Nkai, for the situation analysis of the services sector in Kenya. And to continue the discussion on the contribution of the same to the economic growth of our country, we have Mr. Wanjala. Apparently the name Kevin seems to appear quite often when it comes to issues to do with policy research, trade, foreign policy. So I think in line with that, Mr. Kevin Wanjala, who is a policy analyst and within the trade and foreign policy area in the Kenya Institute of Public Policy and Research Analysis, will be able to give us a dive in on how this sector then brings much wealth to our economic growth. So members also do not forget even to appreciate our presenters, from our CEO's representative to Kevin. I've not even seen any clap or thumbs up or anything going up. These guys are doing quite a lot in terms of what they are bringing in. So kindly let us also appreciate them. Even a thumbs up will be okay. Sawa sawa. Thank you. So Mr. Wanjala, karibu.
Thank you very much, Mr. Victor. And I thank KEPROBA for giving us this opportunity. And KEPROBA is dear to me because I started my career there. I was when I was working at the Ministry of Trade. So I feel I'm feeling at home. So let me put it in presentation mode and then I continue. I hope you can see my slide. And I think Kevin has mentioned a lot of things that I wanted to. Our presentation is more or less, the same, talking about similar issues. But mine, I'm going a little notch deeper to try to see some correlation between the trading services, the different modes of trading services, and how it affects the GDP. As Kevin had mentioned, we have four modes of four modes of trading services, the mode of supply, and among them is the cross-border supply, which is the mode 1, that is according to the World Trade Organization, and this is whereby services move across the borders. For example, an architect in Kenya can email a client who is in the US on some design. Then we have the consumption abroad, whereby a consumer can travel to another country and consume the services. For example, here and seek treatment over there. Also have the commercial presence, and this is whereby a firm in Kenya moves to another country, the way Equity Bank did. The last 2 years, it went to DRC and they set up their branches over there, and also Safaricom went to Ethiopia in the last 2 years, where they liberalized their telecommunication services. So that's a type of commercial presence. And finally, we have the presence of national persons, and this is whereby a worker moves to another country to offer their services. So that's the mode of supply, and these are the things that we're going to be looking at in detail. So basically, Kevin had mentioned the different types and of services. We have the professional services, we have computer services, we have communication services, the construction, financial, and health. And I'm not going to dwell on this because already it has been mentioned. Tourism and transport my predecessor had already mentioned this. But when you look at the export performance, ideally trading services came about around 1994. Initially, we used to have the GATS, but then when we moved to the World Trade Organization, which was established under the Marrakech Agreement in 1994, they brought on board trading services, and that became a key aspect in trade negotiation. And ideally, this diagram over here tries to show the trend pre-liberalization era and after liberalization. Of course, we liberalized our trade in around 1992, and I think that is also the establishment of KEBROC at that particular time. But in 1994, that is when the WTO now came in, and the trade and services was a key or integral aspect in terms of the trade matters. Also, Kevin had mentioned this, but when it comes to the exports and the imports of trading services, we can see our exports, you know, are a little bit lagging behind, but we have much of we are a net importer of trading services. Initially, in the early 2000s, we had an export of around 1.6 billion, but it has been moving gradually. And right now, we stand at 6.1 billion. When it comes to the imports, it was around 1.7. They were more or less the same at that particular time initially, but at the moment, they've spread apart, and we have settled at around 10.8 billion US dollars in terms of the service imports. Regarding the mode of supply, the four that I mentioned, when it comes to the imports, mostly, the mode one, which is the cross-border supply, it takes precedence. And also mode three, it's also more pronounced when it comes to the imports of the trading services. But then when it comes to the exports, we see that mode one, which is the cross-border supply, and this is whereby there is movement of services from the country Kenya to another country. It is more pronounced. You can see at around 2005, it was around 995 million, thereabout, but it has risen over the years to settle at 4.2 billion USD in 2022. But also, of course, there was a dip around 2020 because of the COVID issue, but then again, we rose. But the rising also can be explained by the fact that we have opened our banking sectors have opened up branches around other East African member countries, and also our telecommunications sector has also moved, international. So that will explain that particular spike that we're experiencing right now. Also, mode two, which is the consumption abroad, it's also high, but in this case, consumption abroad, you can take an example of tourism because it's more prominent. We have a lot of tourists who come into the country to consume these services. The tourism sector, it has contributed much in the mode two of the consumption abroad, because initially it was around 662 in the early 2000s, but now we are at 1.5 billion USD. And of course, the dip also came about as a result of COVID-19. Looking at the structure of service, imports by mode of supply, the bulk of imports in trading services, it comes from the insurance and financial services and also the transport sector. Of course, this had been mentioned. But when it comes to the insurance now, you can see mode three, it's more pronounced under the insurance and financial services. And this is the commercial presence because you have other banks that have come to the country to set up a base. Similarly, in the transport sector, also we have other mode one, it's more pronounced over there. And mostly it's because we have our trucks that move around from Kenya to other regions when we are exporting regionally. Looking at also the export services transport, of course, it's the largest one. And mode 1, that is the cross-border supply. It accounts for the majority, which is around 81.1%, and followed by mode 2 at around 18.6%. Similarly, the telecommunications, mode 1, the cross-border supply, it accounts for around 90.1%, and mode 3 at around 9.9%. But tourism, mode 2, that is the consumption abroad. Of course, that the tourists have to come to the country, so 100%. Like mode 2, it has taken the precedence at 100%. Now we're going now to look at the nexus between the economic growth and the trading services. And we did some correlation analysis. I don't know, my graph is not. Yeah, when you look at the imports, when you look at the exports, we see that there is a positive correlation between the economic growth, and the economic growth was measured in terms of the GDP and the trading services. We have a correlation coefficient of 0.8496. That means that we have a very strong correlation, and you can see with the line and the scatter plots, it means that it's very significant, meaning that as trading services go up, also it leads to a positive contribution to the growth in the economy in terms of GDP and economic growth. Also, the importation has a very strong correlation with the trading with the economic growth, and the coefficient is 0.9861. That is very high, and the p-value means it's just significant. When you have a lower p-value, it means that the two go hand in hand. It's not a matter of chance, but ideally the trading services in terms of imports lead to a higher economic growth. Looking at the modes also, under mode 1 also, there is a positive correlation, which is also significant. When you go to mode 2, we are experiencing similar results. Positive correlation, meaning that the two go hand in hand. And also when it comes to mode 3, that's commercial presence, it has a higher impact on the economic growth. But when it comes to mode 4, the presence of natural persons, this is whereby workers move from maybe Kenya to another country to offer their services. The correlation is not that strong, it is weaker and barely out of the range of significance. So we can say that there is no significant relationship between the presence of natural persons and economic growth in the country. So in a nutshell, we've seen that the Kenya's trading services has a strong and growing relationship with economic growth. And this is, as we have witnessed in mode 1, 2, and 3. And mode 3, that's commercial presence, we've seen it emerged as the most impactful on the GDP expansion. But mode 4, as you've seen, it just showed a moderate contribution, but it was not within the range of significance. And now we can say that as Kenya moves towards new economic partnerships like the recently signed CEPA, among others, there is need to strengthen the service sector's capability, especially when it comes to the cross-border supply, the consumption abroad, and commercial presence. This will be key in sustaining economic growth and competitiveness of the country. Thank you for listening to me. Back to you, Chair.
Thank you, Mr. Wanjala, for the insights as to the contribution of the services sector, and also getting us back to what we used to learn in school in terms of the linear relationship that we have. A positive indicates something and negative indicates another thing. Thank you very much for that. I also want to still encourage members within the webinar to continue putting up their questions in the chat box so that you can also be able to respond them as time goes. Some can be able to respond immediately. Some will be responded within the plenary session. So now we are going to have diaspora remittances and what role they play in our economic development. And this will be done by Ms. Maureen Odongo, who is representing the Central Bank of Kenya. Maureen, karibu.
Thank you. You can hear me?
Yes, we can hear you.
Okay. Thank you for the invitation to participate in this virtual sensitization meeting on trading services. My name, just to repeat, is Maureen Odongo. And I'll be talking to diaspora remittances and their role in Kenya's economic development. But before I go into the details of the presentation, when I saw the program, I was trying to figure out, we have fixed remittances in the midst of services. So I told myself maybe it's a way of just sensitizing other flows that come into the country besides services, services flows, either coming into the country or going out of the country. Just before I go into the presentation so that I can put everything into context, there's a big difference between services and just following through the initial presentations, international trade in services and remittances flows. The common element is that we capture these flows in what we call the balance of payments, whereby both services and the remittances are captured in the current account of the balance of payments. However, the major difference is that whereas services arises out of exchange, it could be exchange of any of the services that we have seen. Remittances arises out of transfers. Exchange in this case, I would say, there is provision of something that is of economic value. And in return, you get also an item or a service that has economic value. Remittances, on the other hand, would just require a transfer without what I would call, or what is commonly referred in Latin, there is no quid pro quo. There's nothing you did, but you just get something, a transfer. And the transfer can be current or capital. So I thought I'd just bring that into context so that we have a distinct distinction of what services is and what remittances is. But as I said, the common point is that they're all captured in the current account of the balance of payments, and they're all flows. So more specifically into the presentation is that remittances, and in this case, international remittances, include current and capital transfers, which can be in cash or in kind, and is made or received by resident households to and from non-resident households. So just to break this first point is that remittances can be current, and in this case, current means it's quite often. It happens quite a lot of times, maybe every month, every day, every quarter, every year, or it can be capital. This means just a one-off transfer. It can be in cash, so you receive money, or it can be in kind. It could be either a good or a service. Transfers from abroad, that is inward, or it can be outward. That would mean Kenyan residents are sending remittances or transfers abroad. And it captures household to household transfers. More specifically, on the subject matter of diaspora remittances, this would represent household income and other resources arising from mainly temporary or permanent relocation of people from their home country to other economies. This would mean that, generally speaking, remittances captures household to household transfers. But when you narrow down to diaspora remittances, or what we call workers' remittances, this would mean you are looking for migrant workers. So in this case, Kenyans who've migrated abroad, either temporarily or permanently, and they're sending money back home from their household income. So these would be captured as diaspora remittances. These flows provide social safety net, mainly for consumption smoothing of the recipient households, can also be used for investments, and they also support productive sectors and the macroeconomy in general. At the macro level, we know that they are important sources of foreign exchange earnings. They boost international reserves and investor confidence. So I've talked to this slide where we are looking at the conceptual definition of remittances. At the very narrow definition, we will look at remittances as personal transfers. These are current transfers, and these are mainly household to household transfers. So you have, if in this case, it is inward or an inflow, remittance flowing into Kenya, it would mean that non-resident households are sending money to resident households here in Kenya. So there is that flow, and the transfer is captured as current transfer. It means that it's quite often, it occurs quite often. Then broadening this definition, we have personal remittances that includes other components which are not necessarily captured in the secondary income in balance of payments, but other sections of the balance of payments. One of them is the compensation of employees or remuneration of employees, which arises out of non-resident or resident workers working in non-resident economies, and they are paid in those economies. So this would amount to compensation of employees. In most cases, these are short-term employees, especially the cross-border workers. When they cross, for example, when you look at Kenya-Uganda border or Kenya-Tanzania border, you'd find that we have these short-term workers who just during the day crossover, they go work, they're paid, they come back. So these would be captured as compensation of employees, but it would go into the primary income of the balance of payments. Then we have capital transfers between households. It also amounts to personal remittances, but these are capital in nature, meaning they are one-offs, and they happen between households. At a broader level, we would have social benefits that would add to make total remittances. In this case, social benefits would mean you have a Kenyan work abroad, they returned, and now they are receiving something like pensions, which are just transfers in this case. They would amount to total remittances. Then ultimately, you will have other institutional sectors that would mean NP-shares. Example of NP-shares are NGOs. So transfer between an NGO, a non-resident NGO to a resident NGO. This would amount to either current transfer or current capital transfers. Totaling all these would give us total remittances plus transfers to NP-shares. So looking at it and comparing across the globe, you realize that remittances has become sizable over time and a stable source of financing to most of the economies. Globally, we have countries receiving remittances. So that is remittance inflows. That is key. Looking at countries, especially the small countries across the globe, some receive over 20% of GDP. Even within the African continent, you have countries which largely rely on remittance inflows. For example, Lesotho, Comoros, Ghana, Gambia all receive above 20% share to GDP of remittances. Narrowing down to Kenya is also a key recipient. In 2023, we received around 4% of GDP in terms of remittance inflows. So from this, we realize that remittances represent a key source of stable source of funds. Looking over time for Kenya, remittances has grown. Comparing 2004 when we started capturing this data up to the present period, it has grown over time. In 2024, we received inflows amounting to around $5 billion. And this was about 4% of GDP compared to 2019, when we had received around 2.8 billion, that was representing 2.8% of GDP. When we compare the remittance inflows and other financial inflows into the country, a good example is foreign direct investment and official development assistance. You realize that flows from remittances have overtaken these traditional flows of FDI and official development assistance. When you compare pre-COVID and post-COVID, and even during COVID, you realize that remittances remained very stable compared to other sources of financial flows. And the question is, what has driven these inflows of remittances? For Kenya, there are key factors. There are many, many other factors, but the most important factor has been the migration pattern. When you map remittances with the migration pattern, you realize that there's a strong correlation, a strong positive correlation, whereby Kenyans have migrated across the globe. When you look at migration to North America, as at 2024, these are official statistics from United Nations database. I know there are other statistics out there, but these ones are from the United Nations database. It showed that North America has the largest number of Kenyans, accounting for around 44.6%. This is followed by Europe, Africa, and then the rest of the continents. When you map this migration pattern with the remittance inflows, there is a very strong correlation. For example, remittances that we receive from North America as at 2024 were amounting to around 56.2% of total remittances. From Europe, though it has declined, but it still remains quite high at 17.2%. in 2024. And then we have rest of the world at 26.6%. The second important driver has been technological uptake, and more specifically, digital financial technology. We all know the story for Kenya. We have the M-Pesa, we have the online apps, we have the remittance money providers who have taken up digital technology. And this has been a key accelerator because it's convenient, it's fast, and it's secure. So what we used to have as those sending informally, most of them have come to the formal channel of remitting money. And this has been good because we are able to capture this information. When we look closely at the transfer channels, you realize that both in the host economy, so that's where the sender is, and in the recipient economies, especially in the developed countries, we have had technological developments and a lot of times interlinkages. When you narrow down to Kenya, as we said, the uptake of digital technology and also just trying to bring or to convince the informal to join the formal has encouraged inflows of remittances. Another driver has been the deliberate effort to export skilled labor to across the globe. We have seen this in the recent past, especially in some countries in Europe. There is a close correlation when you map the countries where labor has been exported with the inflows that we are receiving. We've also seen the Asian economies. There has been increase in remittance inflows. Australia has seen an increase in remittance inflows. So this deliberate effort, not just to send unskilled, but skilled labor, promotes inflows of remittances. So what is the role of remittances in the economy? When you look at sector specific, you realize that remittance is important across all institutional sectors of the economy. When you pick the government sector, you realize that it has a key role it's playing. The household sector, you realize that there is an important role it's playing. When you broaden the definition of remittances, that is the NGOs, there is a role remittance is playing in that sector. So analyzing the role of remittances requires data. We used data that was collected in 2021. That was just after COVID. This was a survey of the senders. So we surveyed those who send money, those in the diaspora. We targeted Kenyans in the diaspora who send money back home. And at a household level, we could able to establish what these remittances are used for. So what was clear is that most of the money sent is used either for consumption purposes, with the highest being purchase of food and household goods. We also had medical expenses. I think it being around COVID time, most of the diaspora were sending medicine. We also have education expenses and payment of rent and household utilities, and the list goes on. So there is a mix of consumption smoothing and also investments. What was also clear is that slightly over half of the cash remittances were allocated for investment in real estate, mortgage payment for senders, and the purchase of food and household goods. So at a macro level, what is remittances used for? We managed to map remittance inflows, with other inflows within the current account. So that is inflows we get from tea, horticulture, and coffee, just to see how much foreign earnings we received when we compare remittances with these agricultural inflows, because we know that agriculture is also key in the Kenyan economy. What was clear is that over time, remittances have overtaken these traditional forms of sources of foreign earnings. As at 2024, remittances was 5 billion compared to tea, which was at around 1.4 billion, horticulture 1 billion, and coffee $300 million. So remittances still remains key in supporting the macroeconomy.
Lynn, we lost you.
Oh, sorry. You can hear me?
Yes, now we can.
Okay.
Yes, very clearly.
So did you, I had spoken to this slide?
Yes, we had.
Okay.
Continue.
Okay. Thank you. So we go to challenges in terms of trying to capture remittances data. What we have realized is that still the cost of sending money remains high, even despite the integration and uptake of digital financial services. In 2024, the average cost of sending $200 to Kenya was around 8.3% compared to the global average of 6.7% and the SDG target of 3%. When you narrow down to the Africa-Kenya corridor, it's even costlier. And even countries just around, when you analyze the Kenya-Tanzania corridor, you realize that it's quite costly to send money from Tanzania, Kenya. And splitting further, you realize that we have fees and hidden costs, which in most cases, the recipient of this money is not aware of. So this is one of the key challenges that we should focus on to try and reduce the cost of sending money. We also have another challenge of geographical distribution of remittance money providers, because you can send money to my account, but if that bank or remittance money provider is not within reach, especially to the rural areas, then it becomes a challenge for the recipient to receive money. Or there'll be other costs, either the wear and tear of going to get the money or the transportation fee will be quite high. So this is one of another challenge, especially in the rural areas, that there is need to have enough remittance money providers, even in the far-fetched rural areas. Another challenge is still we are having some households using informal channels, such as the hawalas, the hundis, transport operators, self, and friends. It remains high. In that survey that we did, it showed that still 17% of money is sent through informal channels. And assuming we bring these informal channels, which we are currently not capturing, into the formal channel, that would mean that remittances will be quite high. And we tend to focus more on supply side indicators and ignore the demand side factors, such as access, the usage, the quality, and the impact of remittance inflows in promoting financial services. And this has important policy implications, which as stakeholders, we need to focus on. And lastly is the lack of comprehensive data in capturing in-kind remittances and also outward remittances. So what are the policy interventions that we have seen so far? One of them is regulatory reforms. And this intervention is mainly to have a robust regulatory environment to attract more remittance service providers to increase competition and lower the cost of sending money. Some of the key measures is we have seen the central bank trying to license remittance money providers, trying to bring collaboration between the different money providers, trying to enhance the anti-money laundering and the counter-terrorism financing, and also enhance data protection regulatory frameworks. We have also seen expansion of digital technology, and this is aimed at lowering the cost and encouraging use of formal channels as opposed to the informal channels. We've also seen promotion of use of digital platforms and tailor-made financial products. One of the key interventions is the implementation of CSDAO. This is a centralized security depository system at the central bank, whereby investors don't need to come or to go physically to their commercial banks to trade. If you want to purchase treasury bills or treasury bonds, you can do it online, as opposed to initially it was a challenge whereby you'd have to come to the central bank to physically fill a form for you to be able to purchase, and even getting to know whether you need to buy or not to buy, you'd have to either get a phone call. But now it is online. Everything is online. All you need to know is just to have an account with the bank and an email address, and you get all the information. Maintaining the macro stability has been important, especially for investors. More importantly is the exchange rate stability, which we have seen, especially from the second quarter of 2024. We've also seen diaspora engagement policies. We have had establishment of the State Department for Diaspora Affairs. This is mainly aimed to have a closer engagement with the Kenyans living in the diaspora. More importantly is focusing on skills, knowledge, and resources abroad, which can contribute to the nation. It's not just the money, we also have resources abroad which can be used locally. The stronger engagement of diaspora affairs will promote investment in the country, and also the deliberate effort to have a migration of skilled labor has been a key policy intervention. That's the end of the presentation. Thank you.
Thank you very much, Maureen, for that presentation on diaspora remittances and what role they play and the interventions that we have seen so far, and then how do we also step in to ensure that this continues, given the role that now we are seeing remittances playing within the country, actually overtaking the other sources of foreign exchange. So lastly, in terms of the presentations, we are asking ourselves, how accurate are we able to capture this data on trade in services? And to help us in demystifying this, we have Mr. Isaac Kiprop, who works with the Kenya Revenue Authority, who's going to guide and take us through how then we are able to do this. Mr. Kiprop, karibu sana.
Thank you very much. I don't know whether you're hearing me.
Yes, we can.
Yeah, I don't know in terms of sharing the looks like I'm disabled, not from your end or my end. I'll see whether it's green. So just confirm that you can.
Isaac, there's an echo from your end. If you are able to be stable, if it can be stable, there's an echo while you are presenting, and so if you can be in a place where it's the net is stable, and you're able now to present nicely.
Because I'm trying to share, but I'm not. The system is telling me it's disabled on the presentation.
Maureen needs to stop sharing. Maureen.
Maureen, please stop sharing your screen.
But I'm really.
Okay, let me.
Because Maureen's screen is still on. I don't know whether that is. And since you can hear me, the setups of the domestic tax, plus of course other departments that support all other do. Confirm, but Kevin, are you sharing or sharing? Because so that we know how we are progressing.
And yeah.
Have you shared or it's me sharing?
I've already shared, so you can continue.
Yes, I can see that. I can see you. What I say. You are able to see?
Yes, we can see the screen.
Because I'm not sure whether I'm the one in control. What I'm asking is whether it's me who is sharing so that at least I know the.
It is Kelvin Kai who is sharing his screen.
How to move the screen. It is there. It is.
Okay.
I'm not getting what Madam is saying.
Mr. Kipo, I think Mr. Nkai is the one sharing on your presentation.
What I saying? I'm not. I'm not getting it clearly.
So when you are ready, we can begin.
Okay, so if I'm not the one sharing, then you will guide in terms of it's saying that in terms of trend that you are
Isaac, are you still on?
Can I proceed?
Yes, please. Yes, please. Go ahead.
Thank you. Whether we all understand what all those elements mean. Of course, we have for imports general trade on imports. Then we have exports, which includes domestic exports and re-exports. Then we have transit, which is cargo that's moving across our country. You're moving very fast. Go back. So shipments are the ones that are coming, say, to Mombasa and then offloaded to another vessel. So the where value is provided through banking, insurance, etc. Can I go to the next slide? So what I was saying is that I will put of customs and goods. On the screen, we have international trade by value in terms of billions for 2024 and 2023 compared. And you can see the import amounting around 2.7 3 in 2024 and 2.6 trillion in 2023. You can see something, but of course, as you are aware, the issue of exchange rate have been a factor. Of course, exports in 2024 compared to 2020. These are the substantial figures. Of course, you can see the trade balance. Imports values increased by 4% compared to 2023, decline in imports in the fourth quarter 2024. And of course, exports values grew by 10% 2023. Similarly, the value of can go. The lighter is basically on imports. Now looking at from January to December, and you can now see June in 2024 attributed to cost in their because of actually that's of course after there was a bit of predictability of how the in terms of next for resource this system. Then we have kind of course, customs. These are the pictorial how the imports have been compared 2023, 2024. I think compared with exports. Let me just confirm that. Export product that were traded in 2024 compared to maybe 2023. As you can see, we have petroleum products being with 2% growth, and oil palm where wheat price steel, butane and gases and fertilizer, then telephony equipment. These are product light. Go to the next slide. So 2030, so 38%. We have Malaysia 13%, Japan 12%, Russia drop. Of course, as a result, less imports on terms of visa. Oman also has grown where it was, and of course, Kuwait and South Africa, which dropped. So we are now receiving it looks like the profit. In terms of the product, China, we have iron and steel, railway, machinery, telecom, cranes. Units, Japan, motor vehicles and parts, and iron and steel, Russia, and we have Oman, petroleum products and polymers. Kuwait, we have petroleum products and polymers, and South Africa, core motor vehicles, and so those are the top products. Effects of having the exposed levels of decline. You can see now. It dropped in 2024. When you look at we have what you crave from to the product like quarter one, quarter two, quarter three in terms of the way they have been, and of course the net value of total exports total to what we had seen from the top. Similarly, as you can see, there was a slight increase in the exports values within the from 2023 to 2024, giving us volumes indicated there. The volumes also increased. If you look at total volumes, it was 7 in tons. You can see 7.6. What you're saying is that an increase in export. Yeah, thoughts back exports. You can go to the next slide. We have fruits. We have West crab. Is more or less similar for tea. I think there is almost the same figure. There was a slight growth in cut flowers and coffee. There was also slight growth. Fruits, slight growth. Medicaments, similar amounts. Amounts were expected. Cement, we had a slight drop. And then iron ore, we had a slight drop as well. Nuts. For the Netherlands is cut flowers, vegetables, vegetable herbs. It's for this kind of products from Kenya. UK is tea, scrap, and vegetables and flowers. Tanzania is soap, medicaments, iron and steel. Wheat for UAT and fruits, and then Rwanda we have iron, steel, fertilizer, medicaments. And services. It's growing fast in the present global economy. Main categories of services in international trade are tourism. We have travel and tourism, transportation, financial services, telecom, and IT services, education, international students, health services includes medical tourism, professional services, legal, accounting, and consulting, and we have cultural and recreational services, which is film, music, and broadcasting. Go to next. And as we said, unless we have some bit of comparative analysis on the side of domestic tax, on the side of customs, since we deal with physical goods, we can only point out areas that we may have a role. There are 4 ways, and I think one of my guys had already mentioned, one of the presenters had mentioned the 4 ways of services that are handled through the GATS model. And the description is cross-border supply, consumption abroad, commercial presence, and movement of natural persons. So I think this was more explained, for example, for this. So we go to the next one. Data capture on trading services. What we are saying is as simple. It is more complex than goods because services are intangible and have various modes of delivery. Data is captured in multiple ways. Official national accounts include, that's of course through KNPS and Central Bank, that I think Maureen has already dived into this. Collects and reports data on trading services. This includes exports, services provided by residents, foreigners, and imports of services purchased from abroad. For the side of customs, sorry, so you just go back. I think that is what I was saying. For customs and border control, we deal with clearing agents which provide a service, the shipping industry, transporters, insurance, banks, wallet installations, among others, which provide trading services within the trade chain. Thank you. Go to the next one. Balance of trade. I think this Maureen had really dived into, and I think the list of services that are mainly looked at includes travel services, transportation services, financial services, intellectual property, communication services, and construction among the wider list. And that's where I had hoped that maybe from my direction from the word go from yesterday, I thought we would have somebody to present on the side of domestic tax, how they are capturing this kind of data. The WTO statistics on trade in services captures global data on trade in services, which of course for us in customs may not have basically. So go to next slide. Importance of trade in services drives innovation and knowledge sharing, creates high-skilled jobs, supports other sectors, etc., finance support and manufacturing, often more resilient to trade barriers than goods. Proceed. Challenges in trade in services, harder to regulate and measure than the confection of goods, language and legal barriers, restrictions on movement, e.g. visas, and cybercrime security and data protection concerns. Proceed. Proceed. I think that's the end. So I hope it has been of value. As I said, should you be organizing such a forum in the next sessions, please loop in the domestic tax department. They may have something for the rest of the discussions here. Thank you very much. We have a challenge.
A lot of scaling and to get clearly.
I don't know whether I'm the only one who is not getting.
No, we can't hear Victor. We can't hear Victor at all.
You can try and we can't hear you.
Victor, we can't hear you.
Sorry about that. Am I clear now?
Much better
Yes.
indeed.
I just say thank you, Mr. Kiprop, for taking us through that. And we have taken note of your concern on engaging the domestic tax department to also be part of this. We take note of that as well. So we will just go to the Q&A, which will be handled by Mr. Dennis Mugambi. I hope we can be able to have this also in the chats. For those of us who have already put their questions, some were answered. So maybe you could just maybe raise your hand, and then Dennis will be able to guide us on how we are going to proceed on that. Dennis.
Hello, let me step in for Dennis, who is engaged in another assignment. Now, we are grateful for the presenters who have taken us through a lot of information on these sectors, and I want to believe that the audience could be having a few questions that they would like to field to the presenters. And so this is your time. If you could kindly switch on your mic and ask your question.
Winnie, I can see your hand is raised. Please proceed.
Thank you very much for the presentations. My question, so my name is Winnie Maru, and I'm in the tourism sector. I run a company called Tembe Africa Tours and Travel. And I have two questions. First, especially for us in the tourism sector, what makes it difficult is the air service agreements between member states. So I wanted to find out how far we are, especially on that, because until air travel can be, the cost of air travel between states within Africa can be reduced, really we can't speak much about tourism. And I think someone else mentioned that it's actually cheaper to travel to Europe than to travel within Africa. So that's one. And then my second question is actually to Keproba. I noticed on your site, you really focus a lot on trade in goods. So for us who are in trade in services, when we try and, and log on and put on a profile, it asks us for things that really are not relevant to us because we do not have a tangible product to put on the website to show, as opposed to people who are selling kiondos and all those crafts, because that's what you ask to get that brand. Could you enable it so that us in services can also load our profiles there? And I've asked this question severally in so many webinars, and they say that they're going to do it, but it never happens. Thank you very much.
Thank you, Winnie. We'll get back to you. Maybe we take another question. Any other question? Maybe we could, I can make an attempt to answer the questions that Winnie Maru has asked. One is the air service agreements. This is a state-to-state function, and I wish Winnie could have gone a step further to indicate which African countries should have wanted to have these BASA agreements signed between us and the airports authorities and the states, so that we are able to see how we could pick it up with the transport, State Department for Transport and our KQ. As you are aware, currently our Kenya Airways does not fly to all the countries in Africa. And actually for the few that where it does fly to, we are kind of the savior to some of those countries. I remember sometime I was in Malawi And when we were about to come back, we were ordered into a waiting room, all of us. And when the KQ flight landed, we all clapped because of the same to Nigeria. We all clapped that the savior has arrived. And I can imagine the kind of service that this does to the tourism industry, because many a time when some of those travelers step into the country, some may wish to stay in a little, and they need to be shown around by our friends like Winnie Maru. It's something that we have taken up, but I wish, Winnie, you could go a step further to indicate the potential of countries where you are sourcing, you like to source the tourists from, so that we can initiate and ask to, because this is a state to state arrangement, and so that you can start initiating discussions with a view to having them signed to facilitate both trade in goods and services. So I would like to request Winnie if she has a few countries where we don't have that person, if she could kindly share with us. The second one is that as a state, as a trade promotion organization of government, we do support both trade and goods and services, and the service industry. Actually, this is the first forum we are having for the service industry, the services subsector. And going forward, I want to believe that we will hold more seminars and lobbying some of the other presenters, like the State Department for Trade, which is in charge of trade and services for the entire country. They'll also respond to the issue that was raised by Isaac, and also bring on board the WTO trade and services perspective, which is being done by the Department of External Trade. We, as an institution, we support and all our enterprises in both sectors, service and goods. So maybe let me put my email on the chat, so that if you need to follow up something, you could follow it up with me, and I'll be able to respond to you specifically on issues that you may need addressed, that you've raised with us. I've not had it before, but I'm hearing for the first time, but I'm ready to pick it up from there. Kindly feel free to share the concerns on the email that I've just shared on the chat platform. I hope I've tried to respond to your concern. So, Winnie, I want to believe that that could help. I've seen your issue. You have also said we could touch base, use the email and share whatever concerns you have, and we see how that will go. So, any other question for the presenters, to ourselves? Victor, looks like our people were well served. So do I proceed to give a vote of thanks, Victor?
Yes, please. If there are no questions, we are also available on our email addresses. We can also be able to engage us further on any issues you may be having. This is not the end of this. So we may continue the discussion outside this formal setup. So, Mr. Nyatua, maybe you could just give now the concluding remarks.
Thank you, Victor. Maybe before I do that, I would like to encourage all the participants, including the presenters, to Emmanuel Chuma will share the presentation, and the recording to all the members here present after this event. I want to say that please be encouraged to fill for us a feedback form that has been shared on the chat form. Kindly feel free to fill it in so that we are able to progress, to know how best we can improve the services that we offer through these webinars. Having said that, let me now thank everyone, starting from the CEO for finding time to open the session for us. The presenters who have taken time to prepare and given us a lot of information, starting with our friend Wanjala from Kibra, Maureen from CBK, and Isra Kiprop, my friend from KRA. We don't take your time for granted because you've taken your time and prepared the presentation. I know the time we gave you is was not enough, and at times the network wasn't didn't favor, especially like our colleague Isaac, and that tells you that the importance of the service industry. Our telecommunications, if it was that super, we could not be having a challenge that we've had today, that despite the good presentation that Isaac had, and partly all of us, we wish that the network was stable so that we can get the presentations as they were initially intended. But having said that, we are grateful to all the participants who managed to log in to listen to us. And before I log out, I want to inform you that on Monday, we'll be having another webinar on branding. So kindly feel free to log in and listen. So I want to request Win Maru specifically to log in on Monday. We'll be having a webinar on branding. We'll also be having a webinar on 8th. For those of you who are interested in accessing the Egyptian market on 8th of May, we will be having a webinar where the ambassador will be presenting. So those of you who may be interested, kindly log in. And so finally, as the KEPROPA team, the Directorate of Research and Innovation, we want to thank you for preparing and inviting our communications team for enabling us to have this forum on for the period that it has lasted. And I want to thank every one of you for your time. And I want to encourage that these are platforms that we continue to utilize from time to time to enable us to pass critical information and to enable us engage in topical issues that will be focused on from sector to sector. So from this end, as KEPROPA, I want to thank everyone again and give you our assurance that we'll be here to support you. Feel free to share with us your concerns, concerns relating to sector-specific challenges on services and even goods, so that we are able to address them appropriately. We act as an interface between the private sector and government. And so if there are issues that you are facing in any of the countries, this is the right platform. Share with us, share through our email. And on our website, we also have an email which is open 24/7, enquiries@brand.ke. So kindly feel free to get to us and share your concerns. And we are ready here to support and address some of those concerns. Those that we are not able to address immediately, we share them to the respective state departments so that they can give their comments. To this end, I want to thank you and hand over to Victor to close the session. Thank you.
Thank you, Mr. Peterson Nyachwaya. And just a quick mention of the various sectors that were represented here. We had advertising, we had marketing, we had transportation, consulting, outsourcing, call center, We had agriculture, manufacturing, travel, we had tourism, we have energy, we had software, we had real estate, we had legal, accounting, banking, and securities. We also had the healthcare represented. And finally, we had chemical and other utilities. So this actually does give us a representation of the services sector. And as Mr. Nyatoya has said, specific sectors have their own areas of concern. And this is an area we may want to engage further. So we do appreciate your time and effort you have put to even do participate in this. And we ask that you follow us on our social media handles for updates. As you've been told, he has given you some of those webinars that will be coming up. So kindly plug in and together let's turn whatever it is you have discussed into actions that will be able to drive our economy forward. So asanteni sana, Mungu awabariki. Thank you. Bye-bye.